Greg, Mark, you became CEO in 2009 when the company was at the time running at a loss of around $40 million. And in 2011, it made a strong profit of about $5.9 million. And 2012 figures have yet to be published. But what can you tell us about the financial ups and downs of Hubwoo? And how has last year's event with the SAP acquisition of Ariba actually impacted the top line?
Right. When I took over as CEO, there's no doubt the company was in a challenging financial position. And so the first thing that I did was hire a very good CFO in Sergio Rivera. There wasn't a CFO at the company at the time. So I quickly teamed up with a very, very strong CFO here in Paris. And we began, I think, a process of basically rationalizing all the mergers that had taken place in previous years in a way that had never been done before. We rationalized the company from a go-to-market product standpoint. When I first took over, we had multiple catalog solutions. We had multiple procurement solutions. We had 3 production data centers. We had many of everything, and that wasn't efficient. And so what we did is began to consolidate everything into a single product platform in a single data center and began to, I think, just rationalize the overall cost structure. So in a few years' time, we were able to turn the company around dramatically. And 2010 was a great year from a revenue standpoint. 2011 was a great year from a profitability standpoint. And so now we find ourselves, once again in a transitional sort of period. We have been reporting fairly stable SaaS or recurring revenue, subscription revenue for the last couple of years. What we have been seeing, however, is that our services revenue has been on a decline. There's 2 reasons for that. One of the reasons is that we have been working hard to create a very rapid deployment model for SRM. Typically people take, 9 months and spend millions of dollars to deploy SRM within their organizations. And what we have done is develop a set of tools as well as a methodology to be able to put SRM in production within an organization within about a 5 or 6 week period of time. So what we were seeing was very, very large services deals shrinking down to, relatively small services deals around SRM due to just, the fact that, when people think of cloud, they think of rapid deployment. And so what we wanted to make sure is that we had an implementation methodology that would allow and deliver on that rapid deployment vision or characteristic of a cloud-based solution. On top of that, as a result of the announcement of Ariba, there has been a freeze, if you will, in the market around SAP cloud solutions provided by Hubwoo. And therefore, we have seen a decline in some of the very, very large deals that we have been doing. And therefore, the result has been that our services revenue has been on a decline. That in a nutshell, I think, represents what our financials have looked like in 2012 and will continue to look that way for the next couple of quarters as we transition away from the business that we were in the past, the business that we used to know as cloud procurement powered by SAP software. We've talked about this internally. We refer to Hubwoo 2.0 and Hubwoo 3.0. Hubwoo 1.0 was this company that basically I took over when I took over as CEO in 2009, where we had multiple of everything. 2.0 is when we really got serious and produced a very, very efficient organization based upon single platform, single go-to-market, and it was able to generate some pretty good financial results. We have changed the tagline of the company now to Connecting Companies, as we focus more and more on the business network, which is our own IP. And what's interesting is everyone thinks of us as an SAP company. The reality is that about 70% of our revenue is generated through our own IP, and only about 20-25% of the revenue comes from the SAP apps themselves. So the fact that we are moving and focusing more and more so on our own IP is basically saying we're focusing on the core of this company, the deep DNA around business networks and connectivity and collaborative platforms, so that we can create and control our own future in a much more defined way.
So Greg, how do you think that ratio might look in about 12 months' time with the 70% very much the Hubwoo functionality and platform and 20-25% being the SAP apps? What do you think that ratio might look like in 12 months' time?
It's going to be a steady move towards, probably eventually it will be 100% Hubwoo IP revenue. it will take us probably 5 to 6 years to get to that sort of point to be where it's near 100%. But I would expect in 12 months the ratio is going to change. It's going to be 80-20, and then it will be 85-15 as we move towards a company that is fully dedicated to its own intellectual property.
I'm also curious to know about the structure of your revenue and how much of it is annuity-based and is repeatable. You've got the network model, and what we're finding with a lot of the network providers, especially in the purchase-to-pay space, they're providing an annual subscription model, which is, it means that cash flow is a long way off, but it also means that in the longer term, you're just building each year on the revenue that you managed to bank the previous year. And it gives a company a great sense of financial stability once they get to a certain point. How much of your, again as a percentage, what kind of percentage of your revenue is repeatable and what is not?
Well, right now, 75% of our revenue might be a little bit higher than that when we finally report 2012. But about 75% of our revenue is subscription revenue. So we see between roughly 26 million euros is our recurring, repeatable revenue stream. So, it's really interesting if you look at our company. We're a publicly traded company in France. And, you hear about all these multiples for these subscription-based, recurring revenue-based companies being, 3 to 5 times recurring revenue. I believe SAP paid close to 10 times for Ariba. We're actually trading at less than 1 times recurring revenue. So, in a lot of respects, we're a highly undervalued company from a capital market standpoint. And therefore, we think that there's a lot of opportunity from the company, from a growth standpoint in the capital markets, to be able to leverage that reality.
So if anyone's got some free cash, they'd be wise to go out and get some Hubwoo shares if they could. Okay, so final question on the financial situation of the business. Again, just referring back to May 2012, did you actually lose any clients because of that announcement?
No. I mean, one of the realities of our business is that it's a fairly sticky business. When we're dealing with, when you realize that we have close to 100 million stock items in our catalog system, over 10,000 catalogs themselves representing close to 100 million items. We have several 100,000 suppliers connected to our buyers, and we're flowing, the transactional volumes that go along with that. Companies aren't going to switch just on an announcement. So we have not lost any customers. There have been some opportunities that have definitely been delayed and have, I would say that we actually lost some opportunities as a result of that. But it has not resulted in any customer defections as a result of SAP's announcement to acquire Ariba.
And how did your clients respond to that announcement? Did they feel twitchy? Did they feel nervous? Did they really not care? What was their view?
Well, it's been interesting. For the most part, there actually have been some clients who haven't expressed any interest whatsoever, which I have found quite interesting. But the majority of the customer, if you talk about what the average customer, their response was. The response was a rather pointed comment towards SAP. I don't know if, it's fair to say that not a single customer of ours in our cloud app space made the decision to choose Hubwoo without getting clear indication from SAP that we were their partner, that we were credible, and that we were the way that they should go. And so although the contract is between us and our customers see this as a three-way relationship between Hubwoo themselves and SAP. It's fair to say that they have probably, we kind of did a little bit of analysis on this. We believe that they have spent, as a minimum, €250 million on their implementations of the solutions with us, with internal costs, etc. That's part of these global deployments that they do. And therefore, they look at this as a question to SAP. in that. Listen, don't think that you will be able to walk away from this three-way relationship that exists between us, knowing that we have invested $250 million into this solution, and therefore we fully expect that you are going to continue to stand by and be supportive of what it is that we are doing here. So for the most part, the customers have not come to us and said, with, oh, what does this mean? Are you guys dead now? And it's like, well, of course not. But rather they've been pointing their concerns more towards SAP to say, this is a three-way relationship. We expect you to continue to honor the relationship as we have gone forward based upon your recommendation to go with Hubwoo for a cloud procurement solution offering.
Greg, thank you.